could find yourself with $1 million nest egg by the time you retire. Welcome back to First Wealth, where we're diving into the economics of investing early for the long game. Investing in the future. If you want to be a millionaire, you have to start investing like one. Now, that doesn't mean you have to start making big deals and throwing around hundreds of thousands of dollars. Rather, investing like a millionaire is all about sticking to a careful strategy, investing within your means, and keeping your eyes on the big picture. The millionaire mindset is all about the future. Don't worry about the fancy cars and the nice houses. All the stuff we think of when we think about people with money is just the appearance of money. Cut through all the flash, and remember, it's not about how much you can spend. It's all about how much you can not spend. Consider yourself an undercover millionaire. You can live a happy, normal life, all the while saving and investing like a boss. Start 'em young. The real key to investing is to start as early as you can. Don't wait until retirement. These things take time to grow and mature. Investments aren't like a slot machine where you put money in and you have a chance of hitting it big all at once. They're more like an apple orchard. You start out planting a few trees in a small space, and over time, those trees grow, mature, and start to bear fruit. Meanwhile, every season, you go back and plant more trees. Eventually, your little patch of trees becomes a giant, fruitful yield every year. That said, start young. The earlier you start investing, the easier it is to cross that first million mark. Under the age of 18, you're able to start what is called a custodial account, where an adult manages the account for you until you reach 18 or 21, and are able to legally take ownership of the account. In most states, however, at 18, you're able to start making your own investment decisions. So, assuming you've spent your high school years learning and enjoying your youth, what can you do now that you're ready to get serious about your future? Well, the world is your oyster, and starting out at 18 can really open up your earning potential, even on a lower budget. Take a regular old IRA, for example. If at 18 you open an account with $1,000 and then contribute $100 a month until you retire, by the time you're 65, that account will already be over $400K. If you start that same plan at 25, your return on the IRA will be significantly less. However, don't let that discourage you. You'll still have $250K saved up. So starting sooner rather than later is always the best choice. But starting at all is always better than not investing in the first place. And just because you missed that magic time to start investing doesn't mean you can't reach your $1 million goal. You're still young and have plenty of time to get where you want to be. According to CNBC, a 25-year-old making investments that yield a 3% yearly return would have to invest $1,100 per month for 40 years to reach $1 million. If they instead make investments that give a 6% yearly return, they would have to invest $530 per month for 40 years to reach $1 million. But if they choose more aggressive investments that yield a 9% yearly return, they would only need to invest $240 per month for 40 years to reach $1 million. Everyone has questions about investing from time to time. Learning about finances is a lifelong journey, and the path to financial literacy is always worth it. So if you're ready to grow your economic understanding, click that subscribe button. That way you'll never miss out on any tips, tricks, or financial advice ever again. Now back to the video. One of the biggest roadblocks to reaching your investment goals is not keeping your eyes on the ultimate prize. You should enjoy your life, right? If you had a big week and you want to have a nice meal, by all means treat yourself. But if you're going to reach your goals, you have to balance that with discipline. You've got to stick to your budget and maintain your investments. Like Warren Buffett always says, pay yourself first. Invest in your future first. Then you can go have a good time. Starting small. Start small. In the military, they say aim small, miss small. That means set yourself a small target, and the chances are, if you do miss, it won't be by much. Set yourself up for success. Start small. If you stick with it, over the years, you can really make $100 a month do a lot of growing. And if you start young, if you're able to afford that investment at 18 or 21, maybe in time you'll be able to increase the amount to $150 or $200 a month. Invest within your means. If you overextend yourself, you're increasing the chances of failure. Minimize the risks, and that includes minimizing the risk that you will stop or give up. If you're smart about your dollar amounts and you're persistent, your future self will thank you. Trust the experts. And if you still need convincing, trust what the experts have to say. Real estate legend Grant Cardone put it this way: of course, there are people who have invested in an opportunity at the right time and made a fortune. Had you invested $100 in Bitcoin in 2010, you would have done well. But to me, that's like playing the lottery. A more reliable way to get rich with just $100 is to invest it in a course, book, audio program, or event that will help you improve yourself. Spend it on developing new skills, gaining knowledge, and making powerful connections. When you invest in yourself, you can't lose. Most people spend their whole lives working for their money, and as soon as it arrives, it's gone, whether it's towards bills or the rent or groceries. The expert opinion has always been to find ways to make your money work for you. It will be able to do far more for you than you can do with it. High-yield investments. Stocks, bonds, and ETFs are all part of a well-balanced, diversified portfolio. While stocks can be considered risky, bonds and funds, or ETFs, offer lots of enticing long-term benefits for younger investors. Bonds are considered fixed income investments and are perfect for locking down a regular stream of income for your retirement years. Funds have a much lower risk than simply trading stocks, and they offer a built-in diversification element to your portfolio. They also have a proven track record of providing consistent returns to investors. So while it may be tempting to try to find the next big stock market boom and ride it to the top, remember, trust the experts, take your time, and do what works. $100 may not seem like much, but it can go a lot further than you realize if you invest it properly. If you're a young person looking to build a bright future for yourself, that $100 could be the beginning of a healthy, successful financial life. But what do you think? Jump down to the comments and tell us about your investment plan. Thanks for watching, and we'll see you in the next one.